Greetings. How's everybody this morning? Well, you see, I've got my farmer overalls on, so this is actually part 2 on investing like a farmer. I thought I was finished with that idea, but actually, by some of the comments I got back on the video, which thank you, everybody. Thank you for saying happy birthday so much. And also, the video seems to have been received positively. And so I haven't gotten a lot of head beating over my ideas on it. Although I did pick up some information in the comments that kind of just troubles me a little bit. That's all, So, some feedback here on what I heard from folks. I know AMC came up frequently. That's, it's a entertainment stock. It's currently on one of those, pump and dump things, just like the GameStop thing. Okay. Now, this is not what I'm talking about when I talk about investing. So people get confused often that just because I use stocks as an investment vehicle, they think I'm talking about day trading or this kind of Las Vegas crap table stuff like happened with GameStop and is happening with AMC. These are pretty much artificial situations, all right? They're not real business. They have very little to do with the actual companies themselves. They have to do, with people that for whatever reason, mostly because they want to make some money, if they could start to drive the price of something upward, if they get off before the peak, and it starts to fall, they make money. They can make money, but they make money on the back of a whole lot of people that are underneath them. In a way, it's almost like a pyramid scheme. It's very close to that because people get excited. There's a lot of social media around it. Everybody's going, oh man, I'm making money, and blah, blah, blah. And so, well, the guys that get in later usually get crushed. If you're in on AMC, and when I looked earlier this morning, it was having a small peak in a big plunge. And so if you're still invested, I would suggest get rid of it now is my best suggestion. But I don't tell other people what to do, so you hang in there, you figure it out for yourselves. But that is not what I'm talking about when I talk about investing. I had some feedback from one gentleman that finds that kind of stuff is distasteful, and that it's destructive to the economy. And it truly is. It's not good for companies when they pull that kind of stuff, and it happens all the time. It's, but that's not the kind of investing I do. Then that's not what I'm advocating to you either. I really am referring to taking things that you know to begin with. If you don't know them, I wouldn't pick them up as an investment. In other words, if you drive a Ford car, pretty reasonable thing to own Ford stock. I use Amazon constantly. Living here in Hawaii, I have Amazon Prime. Prices can be expensive. Amazon brings that down. I can get it down here without the shipping charges and whatnot. And so it's really useful to me. Plus, I hate shopping. And that's how I first got Amazon when it came on. It's an IPO. I saw it. I said, yeah, Sears catalog of the 21st century. I won't have to go to Target anymore. And, and so it very much appealed to me. Now, I just used the term IPO, okay? And so I think maybe it's best that I throw these things around. But IPO means initial public offering. No, that happened, I think it was November 2019 with Richard Branson's Virgin Galactic. He decided he was going to release stock to the public that had been in private hands. That's what we call an IPO. Some of us sit around waiting. I'll be waiting for Bezos with his Blue Origins. He'd probably go IPO here pretty soon, especially if he doesn't crispy critter himself on the way back down through the atmosphere. Then when it goes to an IPO, I will be seriously considering picking it up at that price. sometimes these IPO prices will be the cheapest price you'll ever see on the stock. Sometimes they're the highest price you ever see on the stock. But what they mean is that somebody has finally decided that they're going to go in for public investing in their private company. I had questions from folks about investing in metals. Well, like Warren Buffett, like Green Garden Guy, we invest in what we know. I mean, I know gold sparkles, but I really, have never had any success playing around in the metals market. For me, that's been a place to waste of time for me. I know I have seen surges like when the Hunt brothers bought all the silver shares that were out there, and the price of silver went, 2-3 times overnight. If you've been around there when that happened, I was on the wrong end of it. I was a jeweler. I was making jewelry, and suddenly the price of my materials went up so darn high, I could hardly afford them. So that was not a good thing. Okay, in general, when this happens, so with metals, when the prices surge, this usually indicates something miserable is going on. But I've never made money on metals. I don't understand really the whole marketplace. I stick with what I know. And what I know is companies. I have a very good business head, a good business education. My business sense is fairly acute. Call it business acumen. And so I'm very comfortable with looking at companies and trying to analyze, what they're all about and what it's going to be, where it can go, and so on. When it comes to metals, aside from they are far more unpredictable anyway. There are some ways you could look at a metals market and say, yeah, maybe, but the companies in general are probably a lot more predictable. I find them much more so. Yeah, I recommend looking at charts. If you're going to pick up a vehicle for investment, look at the charts. There's a lot of great information out there. And even Yahoo Finance has decent charts for stocks. I use Ameritrade, and they got all kinds of charts, information, data, stuff you can study. A lot of it's real boring, and I really don't look at a lot of it. But some of the stuff I think everybody should be looking at. That is that you don't want to look at just the day's chart. You don't want to look just at the week's chart. You don't want to look just at the year's chart. You want to pretty much expand that thing out to its full max as you can get it, and then sit there and scratch your head and have a look at it. From that perspective, you can get a pretty good idea just by the line, how is this company doing? Yeah, it's really fairly simple. If it's generally going like this, with only a few peaks and valleys, no matter what it's doing at the moment, generally speaking, that will indicate a stock that's on an upward rise. It's probably going to make you money. Its performance has been fairly good in the marketplace. When you see things that are going like this all the time, okay, that's volatility, and really, with volatility, it's sort of like the AMC thing, While it's going up, if you can get in there before it got too high and then dump it before it hits the peak, you can make some money. But it's not good for business. It's karmically, it's not even a good thing. It doesn't help anybody except your pocketbook if you can manage to do it. And it's risky. It'll drive you crazy. This is not what I do. I mean, I've already lost way too much hair. I don't need to lose more over sweating over my investments. I tend to stick a lot to blue chips, things that are, okay, so define the term. What's a blue chip, right? Yeah, blue chips are big companies, been in the market, well-established, long time, things like 3M, things like General Electric, Ford Motor, Google, that's that kind of stuff. Truth is, some of those are a little sleepy and don't make too much gain. But then some of them that are kind of slow to rise pay really good dividends too. And so that's another way a person makes money from stock. And dividend stock and dividend income is far safer than trying to catch the bounce on AMC. Yeah, the money's almost guaranteed. I went for years, pretty much between 8 and 10% interest, paying off Ford shares as a dividend, just picking it up, cha-ching, cha-ching, every quarter, dump a bunch of money in my bank account. Now that's over for the meantime. Beginning of COVID, Ford canceled the dividend completely. And if you're looking at your charts, you can find a slot that will say dividend. And that will tell you, what does a stock pay you? And that's usually rated on a quarterly basis. Every 3 months or so, somebody's going to dump some money into your coffers. Also, as you're looking at those charts, you're going to see something that says P&E ratio. Well, that's price to earnings. That means, what are you paying for this stock, right? What's its price? And what do analysts think that the potential for the earnings on that stock might be? Well, when you got a real high number, it's 32 to 1, and so for PE ratio, well, it's probably not a real good investment. At least it's a guess that the stock is going to make money for you very fast. Now, it's a real low P&E ratio. Usually analysts are figuring for the dollar you put on, you're going to make some pretty good money fairly quick. So that's what that means. You got a dividend box there, you got a PE ratio. Another box on those charts that's really important to look at. What is the high and low of the 52-week, rather. They'll show you the year's high and low values of this stock. Now, when you're looking at it and, you say, oh, wow, look at that. It's climbing to outer space. Boy, can I make money. But you're going to take a look at it and say, oh, whoa, it's like $35 a share. But wait a minute. The high price was $110. Ooh, the low price was $1.50. Wow, is that volatile? Which means right now you're on the backside of a stock that's probably going back to die in the garbage can, and you're going to pay a lot of money for it. That's probably what that means. The AMC stock, people who are investing in that right now are apparently not looking at the 52-week range. Oh my God, look at the 52-week range on that stock. And especially at the day's price. If you look at the 52-week range and the day's price, even though you're looking at a spike right now, you're probably looking at the stock has lost 2/3 of its value already. Look at those numbers. Look at the boxes on these charts. Run the charts out all the way. See what the heck is going on. Just as numbers, the P&E ratio, the dividend, the 52-week range, and the way the chart runs, it will tell you so much about that company if if you're paying attention. What I'm encouraging everybody to not do not do this. If you go on Facebook and somebody's yelling, "Oh my God, I'm making so much money on AMC! Get on board! Get on board!" Run. When everybody's heading south, head north. I'm basically a contrarian investor. 2008, when the market crashed and people were literally diving out of the windows, they were selling their IRAs, their 401ks, all their investments for the future because they thought the world was going to end. And so I'm out there, man. I'm fishing catfish, dude. When they threw all that stuff out the window and it went for garbage as far as they were concerned, I was picking up stuff at discount, bargain basement prices like you wouldn't believe. But of course, I have the supreme confidence that unless the whole country falls apart and the world together, the stock market's going to keep running. Yeah, as long as we got a nation here, and as long as there's a New York City, the stock market's going to run. And so I'm always confident when things go to heck and everybody's screaming, losing, dying, that's where oh boy, look at the money I can make on this one. It works for me every time. It's called Contrarian Investing. When they're heading this way, you go that way. Honest to God. Human beings are sheep. They're in herds. They follow each other around. Oh, horrible. You can see some of the stuff that happened recently, some of the belief and things that have gotten into our society, how much people follow each other around. I personally, other than this garden channel right here, I don't go on social media. I want nothing to do with the garbage they pass around out there. And there's a lot of stuff going around about investing right now. And I'm telling you what, the people getting on that right now, a lot of them are the millennial generation that are really into that at the moment. It can ruin you forever. The middle class in this country in general, a lot of us have a hangover that go back to our grandparents and great-grandparents back in 29. When the stock market fell in 29 and the Great Depression ensued, so many of our ancestors, people came before us, got burned. And even the ones that didn't get burned got scared. Okay, it hurt. It was a hard time. And so as we moved back out of World War II into the 1950s and all that, that fear over the 29 crash and the Depression, it hung in there. And it hasn't gone away yet today. Man, that's the reason I'm on the video camera talking to you all about investing, is because you can't believe how many people that I run across that are just frightened of this. It's corn seed, man. Yeah, you need almost as much brains as it takes to plant a good field of corn. Planting corn is probably more difficult than investing sometimes, anyway. So now I had a question too from one of the viewers. He was asking me about investing in commercial spaceflight companies, and right now it's pretty hard to do that. The majority of them, like SpaceX and Blue Origins, for instance, they're privately held. Virgin Galactic was one of the first ones that made a public offering, and you could get into it, and it's still there. But otherwise, it's kind of hard. You almost have to go into the peripherals that are used in creating this, because there's a lot of materials that are made by other companies that create this commercial spaceflight industry. Probably the simplest way to get into them all is to get involved in ETFs, that have exposure to aerospace industry. ETF means Exchange Traded Fund. What it amounts to, so you got a bunch of guys sitting around, they're investors, they're watching the markets, and they're picking stocks. And so they're going to take stocks that are, say, in this category, bring them into the portfolio, and they're going to trade them, buy them and sell them, get rid of them if they think so, or buy more of them if they think so. And they're going to average what they make on it, and that's what you get from an ETF. If in the last month the thing went up 15%, you're going to make 15% more than you had the month before off the ETF. It's a simple thing. It doesn't take too many brains, because a lot of times the guys that are running the ETFs, they're pretty sharp. They know what they're doing. And the better ones will actually make you some pretty good money easily. Currently, I'm in 3 ETFs on commercial space flight at the moment. They've all been pretty good. There's not one of them has been lagging too much. There's ETFs on all kinds of things. ETFs on digital technology right now have been really sweet. Ooh. Yeah, because everybody's like refitting the world for remote learning, remote work, so those have been really good. And sometimes it's kind of hard to figure out what stock in this or what company is really going to make the most money off of it, blah, blah, Well, the ETF takes that risk out of it. Somebody else is going to figure out what's going on for you and kind of give you an average figure. You don't make as much money off them usually as you would when you get a real killer single investment. They're good. They're convenient. I use them. I recommend them. Yeah, some of the other things I heard in comments then that I found almost frightening, and that is people talking about how, they got an investment. It's a stock. They get a stock. Put their money on a stock. Put all their money on a stock. That's why people are afraid of investing. Usually this type of stuff happens, again, because somebody else comes and says, oh yeah, you gotta have this, it's hot. A guy never had any stocks in his life, never invested in anything. Somebody comes up, whether it's face-to-face at the bar or whether it's on, the internet, which is very much how this happens today. It's the social media yak. And so somebody will say, oh yeah, it's good stuff, and so somebody else who wasn't familiar with investing will set themselves up to go on out and say, buy that particular issue. Well, like I say, oftentimes all of that is all about pump and dump. If somebody can get enough interest going on a particular stock that they own low value shares of, it's possible by getting people excited, they can drive that price way up to the top and they'll get out before it falls. But the rest of the people that got excited, they fall into the pit. And so it's a real great way to get a bad taste for ever investing in anything again. I have several friends like this. There's also the knee jerk. The knee jerk. Whew, that'll lose you more money than anything I have ever seen. There are times when maybe we'd all be better off if we had our stuff consolidated to cash or something. 2008, it was, well, if you wanted to really make any money off 2008, you needed to have sold a bunch of stuff somewhere along the line, hopefully before the fall, that you would have a pool of cash that you could go back in and invest, okay? But generally speaking, under most of the peaks, valleys, bumps, and the roller coasters in the market, hanging on is the thing to do. Especially if you're reading those charts, then you can see, oh, it's done this and that over time, for whatever reason. But man, mostly the line, 10-year line, is uphill. Just because it slumps, if the slump is due to things happening in the world at large, like COVID could cause a slump. It can also cause a spike. But if it seems to be not specific to that company in general, the slump doesn't mean anything. It'll recover. Yeah, it doesn't mean anything. Don't pay too much attention to what goes on from moment to moment. The peaks and valleys can drive you mad if you do. So that brings us down to diversification again. Get yourself a cluster. You want a bunch of stocks. If you have $1,000, do not take $1,000 into the market and buy however many shares of Apple or whatever it'll give you. Don't do that, okay? If you wanted to own Amazon at, over $3,000 a share, well, that's up to you, but you're not going to be able to do it with $1,000. So you start in somewhere lower down there, and you start looking at some quality stocks that have prices that you can fit into to get, yourself at least 10 or 20 shares or something. Maybe it's 100 shares. I like to work in 100-share blocks, but it doesn't matter. If all you can afford is 2 shares, buy them. Okay, right now, most of the trading platforms are allowing, no charge on transactions anyway, so it doesn't really matter, You can buy 2 more next month. You can buy 2 more the month after that. This is all right, and this is the way you do it, okay? And, sometimes when I bought a stock at $36 a share, and I know it's a good one, so I'm not going to duck out, but it falls to $18 a share, half its value. So I have now lost half of my money. Well, it's goofy, but one way to get your money back is, I go in at $18 a share and I buy a whole bunch of the stuff. And so then what happens is I dilute the loss so that my loss, instead of being, half of the value, instead the loss might only be 20% of the value. And usually those stocks will go back up, and so at that point I got a lot more stock and the value's going back up, and it goes back up faster because I diluted it by buying the low value stock. When my stock was plunging and hit a bottom, instead of dumping it and losing my money, instead that's a buying opportunity. Sometimes when you're in the market and you're investing, you almost have to think backwards of what seems natural to you. It's really the way it is, because the people who get scared take the money and run are the ones that lose. The people that hang in generally win because things correct. They change. It goes back up. And so I wouldn't do too much knee-jerk when you're watching your investments. Well, I think that'll cover it for now. It's already got too much time here going. So, aloha. There's some notes and feedback into the comments that we got on the last video. So y'all have a wonderful summer. Hang loose.